Welcome everyone to the Navigating Canadian Cross-Border Trade webinar. This webinar was put together with the Canadian cross-border shipper in mind, as we and probably many of you watching are preparing for the rest of the year and for going on to 2023. So today we're giving you an overview of what we see impacting shippers on the border, both on the transportation side and the trade compliance side, including an overview of CARM, which will be a big change for all importers to Canada next year. So on behalf of UPS, thank you for joining us today for this important update. My name is Anna Grant, and I'm a Senior Marketing Manager for Customs Brokerage at UPS. And it's a great pleasure to host this call and see all of you here and to introduce our fantastic speakers. So first, we have our two customs brokerage and trade compliance experts from UPS. Tim Wing is the Director of Global Customs Brokerage Growth at UPS, and he's been in transportation, logistics, and customs brokerage for over 35 years, working both in Canada and in the US. He's a licensed customs broker in the US and also maintains CCS and CTCS designations in Canada. We are also joined by Penny Moulton, who is the Director of Trade Management Services and Trade Compliance at UPS Canada. Penny works with multinational companies every day to assist them in navigating Canadian importing legislation. She holds a bachelor's in business administration degree from Yorkville University with CCLP, CCS, and CTCS designations. And she's currently on the Canadian Border Customs Consultative Committees with the CBSA, and she's been heavily involved in testing and developing CARM on the CARM committee. We also have two amazing subject matter experts from Coyote Logistics. And for those of you who don't know, Coyote Logistics is a UPS company. It's a third-party logistics provider who matches more than 10,000 shipments every single day. From Coyote, Scott Pulak has joined us. He's the Director of Canada Operations and responsible for growth, utilization, performance, and partnerships with carrier partners, and has over 11 years of experience with Coyote. And then we have Brandon Kohutch, Senior Manager of Canada Sales and Operations. Brandon is responsible for customer service satisfaction, growth, personnel development, customer partnerships with really all companies who ship to and from Canada. And he's been with Coyote for close to 13 years now in a variety of customer-facing roles. So it's a great pleasure to introduce and welcome all of our panelists. Thank you for joining us today. Before we move on to our agenda, I do have a couple of administrative updates here. First of all, you might have noticed this meeting is being recorded and will be provided to everybody who registered after the call. We also, as always, encourage Q&A. So on the bottom of your screen, you see a little Q&A function. So please submit any and all questions you have in that Q&A function. And we have folks on this call to take them during the call. And if there's anything we can't get to, we'll be in contact with you afterwards to make sure that your questions get answered. Next, for legal purposes, I'm going to have to read this following message verbatim, and then we'll get ready to start. This presentation is for informational purposes only. It does not constitute legal advice. Please consult with your own legal counsel for such advice. Do not rely on this information without performing your own research. All right, so with that done, let's take a look at our agenda for today. We're going to start with a trucking market update with the folks from Coyote Logistics. Then Tim Wing is giving us an overview of navigating cross-border compliance and specifically the documentation and how to fill it up to optimize your shipment movement and make sure you avoid delays where you can. And then we'll go into the big update, which is CARM. Penny will cover the impact of CARM on commercial importers, and then do an overview of some of the key functions of the portal, including payments. So with that, I think we're ready to hear from our presenters already. So I will hand it over to Brandon to start us off with the trucking market update.
All right, thanks, Anna. First off, do you want to take some time to thank everybody for taking time on their day to attend the webinar. We're obviously very excited to present you today. So for context, as Anna mentioned, we are a 3PL. We do a lot of cross-border shipping every single day. And at Coyote, about 65% of our cross-border business is with US-based customers. So we do have a good blend and haul a lot of shipments for both inbound and outbound Canada cross-border business. So therefore, our market update and the slides, for sure, these first two are relevant to both US-based customers and Canadian-based customers. That also includes shippers that have a wide variety of experience, maybe some that are just getting started with shipping cross-border, or also some that have been doing these for many years. So whether you're a Canadian or American, doing cross-border business is a great opportunity to grow your business. In 2021, the two countries completed $650 billion worth of trade, and Canada was the #1 trade partner with the US when you look at the combination of both imports and exports. Around 30,000 shipments per day across the northern border, with around 70% of that volume moving as over the road. So why are these countries such great trade partners? Well, geography jumps out as an obvious answer, which is true. There are a couple other points that I want to call out as well. While Canadians and Americans are certainly different people with different cultures and experiences, we do share a lot of similarities as well. French is one of the national languages within Canada, but the majority of Canadians do speak English. This makes communicating very simple. We also share a lot of the same interests, so foreign products from either of the countries are well received. As a Canadian citizen myself, who lived the first half of their life in Canada, but now I live in the US, I can see and feel these similarities and differences every day. Definitely different, but close enough to be an ideal trade partner. The other factor I wanted to address is the carrier habits of Canadian carriers. About 70% of cross-border carriers are based in Canada. They usually have a dedicated outbound run from Canada into the US. Therefore, Canadian carriers look to 3PLs like Coyote to help them get back to their home with that perfect backhaul in time for their next dedicated outbound run. They're more likely to look for consistency and regularity in their backhauls because waiting around and searching for that big spot load isn't worth the risk of running back empty. They prefer stability, and this creates more stable pricing for our American exporters and our Canadian importers as well. Jumping back to geography, another point worth calling out to the American-based customers listening here is that Canada has a large population, 38 million, so about the size of California. There are a lot of potential customers and consumers, and about 80% of those people live within 100 miles of the border. It's a large country in size and population, but it isn't as difficult as many think to ship to these densely populated areas. So another big plus towards trading between Canada and the US. The Canadian freight market is highly fragmented, much like the US, with close to 90,000 registered trucking companies, and 90% of those have less than 100 employees. Again, the big value add that a 3PL like Coyote can give to cross-border carriers and customers is increased visibility to more customers' freight to many of these fragmented smaller carriers. They otherwise wouldn't even know some of those Canadian lanes. So we increase the chance of them finding that perfect backhaul that I mentioned earlier, and then passing on that stable capacity and cost savings back to our customers. Finally, with being such a massive country, it does make sense that intermodal plays a larger role in shipping across Canada. So as a customer, if you can handle a little extra transit time on your intra-Canada runs, intermodal can provide a good cost-saving alternative for you. Okay, let's go to the next. All right. So next slide, we want to give an overview of just the first half of 2022. For all of you on the call that have shipped cross-border for one or two more years, you know firsthand how challenging the first 4 to 5 months of this year was. We didn't have one major disruption to deal with. We had about 5 to 6, many of which overlapped with the previous disruption, or 2 or 3. It all started back in November 2021 when BC was hit hard with some terrible storms. The resulting floods caused the storms to cut off all over the road and intermodal shipping out of Vancouver and surrounding ports. Many customers were left scrambling to find a way to get their goods out of those ports and distribute in time for the holiday demand. At Coyote, it was particularly challenging, of course. What we ended up doing was sourcing a lot of bonded team capacity for UPS and many other larger customers, because the only way that we could drive the goods out of Vancouver was to go down through Washington and back up into Canada towards the final destination within Canada. As you can imagine, this type of service offering became very sought after and carrier costs exploded. And that was just the first disruption. Next was the vaccination mandate imposed by both the Canadian and American governments, which stopped any unvaccinated foreign national truck driver from entering each country. We estimated that 10 to 15% of capacity was no longer eligible for cross-border, which just further increased demand. Winter storms impact capacity every single year, but this year, since the cross-border driver market was already depleted, the impact was felt even more. Next, we had the border protests, which I'm sure everybody remembers. Although it was, like, I kind of joke, it was always nice to see my hometown of Windsor, Ontario on CNN in the United States. That was a rare experience. It wasn't exactly great for someone like me who works in cross-border logistics. I think I could have went without it. It caused a lot of pain points for a lot of customers. A huge shipping backlog built up, and it took months and months and months for customers to get caught back up. Again, rates continue to climb. Finally, throughout all of this, fuel costs and inflation continued to climb up. It wasn't until around the middle to end of May when the market finally began to cool down, costs began to drop, and all of us could start to breathe normally again. So it was definitely a challenging and fun, I guess, in a way, first half of the year. I think it expressed the importance of a customer being able to have backup plans in place. Like I said, just created a very challenging market that made everybody reevaluate their supply chain a little bit more. So Scott's going to expand on the market in greater detail with the next couple of slides. Thank you.
Yeah, great. Thank you, Brandon. So we hope all of you have either seen or heard of the Coyote curve before, but if not, we'll give you a quick overview. And if you're interested in diving more into what makes up the curve further, please visit resources.coyote.com. So the truckload market has three distinct simultaneous cycles that drive it. There's the annual procurement cycle, the seasonal demand cycle, and the market capacity cycle. The Coyote curve is our proprietary index that uses years of market data and insight to measure the market capacity cycle. We look at the annual change of spot rates, comparing each quarter to the same time frame from the prior quarter. An inflationary market is when the line is above the x-axis. That's when shipper demand outpaces the carrier supply, causing rates to increase. When the line is below the x-axis, we are in a deflationary market, which means the rate of change in spot rates is lower than the same quarter from the previous year. This is driven by carrier capacity outweighing customer demand, leading to decreased rates. One complete market cycle starts at the equilibrium, goes up to an inflationary peak, drops down to a deflationary trough, and then back to the equilibrium. One example of this is 2017 to 2020 as one complete market cycle. So now that you have a basic understanding of the Coyote curve, we can compare our first iteration of the Coyote Canada curve. The Canadian and US markets were comparable for the 3 years prior to 2020. Then the COVID-19 pandemic hit, which sent the US market into a frenzy, while the Canadian market remained relatively stable for 2020 and most of 2021. There were a couple key differences due to the handling of the pandemic that kept costs stable in the Canadian marketplace. First, border closures to non-essential travel, followed by the slow reopening for vaccinated individuals with testing. This really slowed down the overall economy and the cross-border, really tourism that drives much of Canada. Then there was the slower reopening efforts nationwide. Canada had a much more conservative approach to the pandemic, which weakened overall consumption and of demand for products. Canada also has a reliance on the automotive industry, which experienced many issues with chip availability, which slowed down production for those automakers. Then, as Brandon mentioned, came November of 2021. The heavy rainfall in BC caused mudslides and flooding in British Columbia that caused major damage to highway infrastructure. We see the largest impact of this with the intra-Canada lines spiking well above all others. Due to the rerouting necessary due to highway closures, many intra-Canada shipments were forced to route through the United States in bond. Demand for these moves were substantial and rates skyrocketed as customers' supply chains crumbled. The market took off from there in the first half of 2022, again, as Brandon mentioned earlier, leading to the highest peak in recent memory by March of 22. But we're looking towards fading back to a deflationary market, which we expect to hit sometime next quarter. You can jump to the next slide. So a couple other economic updates that we're seeing in Canada right now. Inflation reached 7.6% in July, coming off of the peak, which was 8.1% in June. Bank of Canada has an interest rate at 3.25% at the moment, which is the highest level seen in nearly 15 years. Labor shortages also continue to be an issue in Canada, with the labor market getting tighter and tighter, driving wages higher. Fuel costs are up over 30% year to date, but are actually down almost 20% from the highs we saw in May, causing a lot of challenges for our carrier partners as all of their costs are going up. So along with fuel costs, we're also seeing higher costs for insurance and other things that are driving the carrier costs much higher. Again, we're expecting a deflationary market to hit by next quarter, Q4 of 2022, as we see that comparing the relative change year over year in rates. So we call it deflationary because we're going to be comparing it to those peaks coming from the BC issues that we saw in November of last year. Really, we do expect, barring any unforeseen circumstances to hit, we expect things to remain relatively stable through at least Q2 of next year. And I'll pass it back over to Brandon.
Thanks, Scott. So as Anna mentioned, my primary function here is to work on the customer side of our Canada and cross-border shipping. So no surprise, one of the conversations that I do have with a lot of customers, both new and existing, is just best practices when it comes to shipping across the border. So I wanted to list out the 4 big ones that I tend to tell our customers and really hammer down with them. The first being the importer of record. You have to establish the importer of record. Either the shipper or receiver needs to be the one responsible for that shipment and responsible for the customs clearance and resulting duties. That person is the importer of record. So before you get shipping, or if you're just starting, before you ship, you need to decide if you're going to be the importer of record or your partner that you're involved in the transaction with. If you are going to be the importer of record, the next step is you have to get a trusted customs broker. That is critical, ideally one with a lot of experience in shipping cross-border, because they know all the nuances that are involved and the requirements and are on top of laws that are constantly changing. It's very important that you make sure that you have somebody trusted in that position as the customs broker. The next is organizing all the documents prior to shipping. We do see this happen a lot, especially with new customers that are just shipping for the first or second time across the border. You are dealing with government officials, and paperwork needs to be perfect. So it is definitely in your best interest to talk to your customs broker, understand what documents need to be completed and who is going to be ultimately responsible for filling those out, and get them done ahead of time. It never hurts to do a couple practice documents to send back to your customs broker for them to look over and let you know. Ultimately, the biggest advice I always tell people when it comes to the documents is utilize that trusted customs broker that you chose. They are the experts. They're there to help and guide you through the process. Finally, select a reliable freight forwarder, 3PL, and or carrier to haul that shipment for you. Ideally, you'd want somebody with a lot of experience as well, because they just provide another layer of support to potentially find out those problems or issues, like a paperwork issue, before they actually occur. Because the last thing you want is a delay at the border with your shipment and resulting fines through accessorials or duties. So that's the big points of interest that I always tell my customers and to concentrate on. I know Tim is going to talk a lot more on this in his section. So enjoy. Thank you, everyone.
Thanks, Brandon. Thanks, Scott. Perfect segue there for the portion of the discussion today that I'm going to lead us through. And Ann, if we could go to the next slide, I'm really going to focus on the paperwork basics, some of the things that we want to make sure that we have in place before a shipment gets to the border. So real simple, the reason you want to make sure that everything is accurate, complete, and consistent. Importers to Canada are subject to audit in the same way that importers to the US are subject to audit. So US customs requirements are 5 years. Canada is 6 years plus the current year. So you want to make sure that you keep and maintain accurate and complete documentation for all your imports. So really the documents boil down to a handful of things. It's the carrier bill of lading, and I'm going to go into some more detail on some of these subsequent screens, but the carrier bill of lading, the airway bill, whatever cargo control document is accompanying the shipment needs to be there. It needs to be complete, needs to be accurate. The commercial invoice or the Canada Customs invoice for any formal entry, and I'm going to spend quite a bit of time talking about the need for accurate and complete commodity descriptions, Canada tariff classification, valuation, and then of course the responsible parties, the importer and the broker. If you're looking to minimize the duty impact on shipments into Canada, you want to make sure that you have the certificates of origin. If you're claiming preferential tariff treatment, you're going to need to have that as the importer record to support that claim for duty relief. We're going to talk about OGD documentation. In the US, it's referred to PGAs, partner government agencies. In Canada, they're referred to as OGD or other government departments. You want to make sure that if you have commodities that are subject to Health Canada, Canada Food Inspection Agency, Natural Resources Canada, et cetera, you've got the appropriate documentation that's included with the shipment at time of entry to make sure that those goods aren't going to be held at the border. These bottom two are really focused towards that non-resident importer, that US company that's doing business in Canada that may not physically have a presence in Canada. A business number in Canada is the Canadian equivalent of a federal tax ID or an EIN number here in the United States. Just about every Canadian company has a business number. If you're a non-resident importer looking to do business in Canada, you also need that business number. Your broker will get that for you as part of the account setup process typically, but you will need to have that. The other thing, and Brandon mentioned that, is the power of attorney or the general agency agreement as it's referred to in Canada. The power of attorney or the GAA that authorizes a broker to do business on your behalf to represent you with CBSA in Canada. These are all things that you're going to need before your shipment crosses the border. Next screen, please. So talking about, before we start digging into the documents, we want to talk about who's responsible for creating these documents. So typically the carrier bill of lading is created by the shipper. The shipper is packing the freight, loading the freight, weighing the freight, typically making arrangements with the carrier for transportation. So the shipper typically creates that carrier bill of lading or the airway bill that's going to accompany the shipment. The exporter, which is very often the seller and or the manufacturer of the goods, could be responsible for creating that certificate of origin. So I've listed on here USMCA or CUSMA. Everybody was familiar with NAFTA for 25 years. That was recently renegotiated, now known in the US as USMCA and Canada as CUSMA. But again, if you're going to request preferential tariff treatment for goods entering Canada, you need to have the appropriate documentation to support that request. The Canada Customs invoice or the commercial invoice, that's really the key document. We're going to go into that in some detail on the next slide. There's some overlap between the exporter and the importer because the importer, as Brandon mentioned, is ultimately the party responsible for the payment of duties and taxes to the government of Canada. So ultimately, the importer wants to make sure that that certificate of origin is included at the time of entry to make sure that the broker can provide that relief of duty. Typically, the importer obviously isn't the manufacturer of those goods, so they rely on the exporter or the manufacturer at origin to work with them to make sure that that certificate of origin is complete, it's accurate, and it's presented at time of import. The last thing on here that the importer is generally responsible for in Canada are any import permits. So if there are goods that are subject to Health Canada or any of the other government agencies or some of the other government agencies in Canada, for goods entering Canada, it's typically the importer of record in Canada with a physical presence in Canada that's going to need to request and make sure that that import permit is provided to the broker at the time of entry. So again, high level on who's responsible for these documents. Going on to the next slide, let's really dig down on that Canada Customs invoice, because this really is the key document that Customs is going to be looking for, that the broker is going to need at time of entry to make sure that all the required information is provided. So the first thing that's identified here on box number 1 is the U.S. seller. You know, that's the vendor. Who is the U.S. principal party of interest, the beneficiary of the sale for those goods entering Canada? Complete name, complete address. I always suggest that the phone number be included there as well in case the carrier or the broker has questions about the goods entering the country. They've got a contact phone number that they can reach out to. Box number 2 is the date of direct shipment. Doesn't seem like a big deal, but you want to make sure that that's accurate because it also sets the exchange rate that's in place at the time of entry. The date those goods begin their uninterrupted transportation to Canada is the date of direct shipment. Box number 3 is any reference information that the importer will want to be included on that invoice. Box number 4 is the consignee. Pretty straightforward. Who's the recipient of the goods? Where are those goods physically going to be delivered to in Canada? Again, complete name, complete address. Best to have that same phone number on there for that recipient, because if Customs or the broker or the carrier have questions, they're going to want to reach out to someone to get that information. Box number 5 is the importer information. It's the purchaser's information. And even though it states on there very clearly the purchaser's name and address, if other than the consignee, even when it's the consignee, I strongly suggest that you include that information on there. It gives the broker a check and balance to make sure that they're clearing on behalf of the appropriate party in Canada. Some of the other key elements, the country of origin of the goods. And if you could, there you go. Box number 7. Country of origin in this case is Italy. If there are various countries of origin, you want to detail that on the commercial invoice. But again, you want to make sure that you're detailing it here on the Canada Customs invoice as well. Box number 8 is the transportation and the place of direct shipment. So again, we've got our fine friends from Coyote Logistics on the phone today. For a Coyote Logistics shipment moving into Canada, we've got their name, we've got the place of direct shipment, where the goods originated in the United States, in this case, moving into Canada. Box number 9 are the conditions of sale. So in this case, it's a sale transaction. The goods have been sold from a U.S. seller to a Canadian buyer. It also identifies the Incoterms. The Incoterms are confirming for the broker who the importer of record is. In this case, it's delivered at place at the recipient's address in Canada, so we know that they are the importer of record. The broker makes sure that they're clearing on behalf of that Canadian importer. And then lastly, on the top half of the document is the currency of settlement. In this case, it's Canadian dollars. It's always critical that you include the currency of settlement. You could have Canadian dollars, US dollars, euro, yuan. You could have any currency you want listed on here that serves as the basis for that sale. The broker is always going to be required to convert that into Canadian dollars when they present to Customs. So it's very important. In this case, it's a shipment originating from the US. If that shipment originated in Europe, you'd want to make sure that you had euro listed on there if that was in fact the currency of settlement. Key information. You don't want to have Canadian dollars converted to Canadian dollars or something like that. Make sure that that's very clearly identified. Next slide, please, Ann. And looking at the bottom of this document, again, we've got some other key areas. So the first thing is the boxes 11 and 12. It's a description of the commodity. Very important. So we've got the 2 skids, which is the transportation component. That needs to be consistent with the bill of lading. If the bill of lading says there's 2 skids, you want your Canada Customs invoice to also reflect that there are 2 skids with the piece count as well. You want a complete and accurate description of the commodity. Men's 100% silk ties with a Canadian tariff classification, not the US tariff, not the Schedule B. Canada Customs requires the Canadian 10-digit tariff classification to be provided at time of entry. So again, if you have it at the 6-digit, the broker is going to need to make a decision about those final 4 digits. And that's where the description needs to be complete and accurate so that the broker can either make that decision or they can reach out to the shipper or the importer to clarify. The quantity, box number 13, there's 1,000 items in here. Again, the description says 2 skids said to contain 1,000 pieces. Your quantity needs to match that as well. The unit price in box number 14, each of these ties are $50 ties. These are some nice Italian ties. Extends it out to the total. So you've got 1,000 ties at $50 a piece. You've got $50,000 for the extended total value of the shipment. Valuation is a key component for customs. It's not what the goods were manufactured for. It's what the first selling price in Canada represents. Typically, it's called the transaction value. What did the buyer pay to the seller for those goods entering Canada? And then you have the invoice total at the very bottom. You've got that $50,000 again. The invoice total is $50,000. There's no other costs included other than the merchandise. So keys, description, quantity, unit price, extended price, very critical information. A couple of other things on here, and if you hit that one more time, you've got the customs clearance. You want to identify who the broker is. If the seller knows who the broker is, they should put it on there. It helps the carrier know where they need to send that documentation. It also ensures that the broker knows when they get that documentation that they're clearing something that's supposed to be cleared by them. If this were to say customs clearance by ABC company, and this were to show up at the UPS office, the UPS office would have to advise that clearance to ABC company so they could make the entry. So again, check and balance it. Make sure that the right broker clears on behalf of the importer. And then something we don't think of often, but it's actually a very important thing, is the weight. You've got 1,000 ties and you figure a tie weighs 8 ounces. That should be about 500 pounds. So if the weight shows 500 pounds, that's more or less correct. If that were to show 2,000 pounds, Customs is going to look at that as a check and balance and say, well, wait a minute, 2,000 pounds for 1,000 ties, something's not right. There's something in this shipment that really doesn't belong in there, and that red flag is going to go up. The gross weight is the weight of the commodity plus any additional packaging. Again, when the shipper creates the shipment, he's going to package it. He's got a couple of pallets there. He's got some cardboard packaging. So the gross weight would be slightly larger typically than the net weight. But again, you want that to be consistent. If the bill of lading says 580, you want the Canada Customs invoice to say 580 as well. So very critical, the information that we've talked on, be consistent, be complete, and be accurate, so that when the carrier presents this to the broker, and the broker presents this to Customs, everything is consistent. CBSA has the information they need to finish the entry. So just summarizing, if we go to the next screen, again, we've got 3 things that really are critical, and Brandon touched on these as well. Make sure that the importer is identified on the customs paperwork. One of the big delays at the border is when it's not clear for the broker or for the carrier who the importer is. There's many carriers that won't even load a shipment going into Canada until the importer's been identified, until the broker has made the entry on their behalf. They'll move those goods, they'll move them in bond. There's an additional cost. It does keep the shipment moving and it does decrease transportation time, but it's going to lead to a delay. Likewise, make sure that the broker is identified. The carrier needs to know who's going to handle that clearance so the shipment moves, it's streamlined, it gets across the border, and it goes out for delivery. I can't stress enough, complete, accurate, and consistent documentation. Make sure that the data elements on the Canada Customs invoice are complete and correct. Make sure they're consistent with the carrier bill of lading, and make sure that if there are any free trade agreements, any preferential tariff treatments that are being requested to reduce duty, that documentation be included as well. So real high level summary, complete, consistent, accurate documentation is critical. With that, I'm going to thank you, and I'm going to turn it over to Penny, and Penny's going to give us an update on CARM.
Great, thanks, Tim, and good morning, everybody. So I'm going to talk a little bit about CARM, talk through the registration, what's required overall from a CARM standpoint. So what is CARM? CARM stands for CBSA Assessment and Revenue Management. It's actually a Government of Canada initiative. It's not a customs broker initiative, but it's really going to be a portal that allow you to register and view your account in the portal. And I'll talk more about registration as we go through this presentation. But it's mandatory for all commercial importers into Canada, and you'll be able to pay CBSA directly for your duties and taxes once Release 2 is into effect. And from a CBSA standpoint, when you register using your business number. And again, I'll talk further about that in the presentation. So Release 1 is in effect now. So that gives you the opportunity to register in the CARM client portal now and delegate access to your service provider. CARM Release 2 is scheduled to go live in October 2023, but it's important that you register now. You're able to see the financial information. You're able to see your statements of account. If you need a ruling, your customs broker can complete a ruling on your behalf, and that's all done through the CARM client portal. And moving forward, once Release 2 is in effect, you will be able to see all your commercial accounting documents related to all the transactions from a financial perspective. You will not see any paperwork that was used to clear the shipment coming into Canada, but you will be able to see anything related. If there's any AMPS penalties or anything like that, you'll be able to see all of that detail in the CARM client portal. So from a carrier perspective, if you're having goods shipped, for example, into Canada, some carriers will be putting a load or no load process in place. So meaning you'll have to show the carrier that you are registered in the CARM client portal, because in order for goods to be accounted for coming into Canada, you need to be registered and have your customs broker delegated access into the portal. And that will determine whether or not the freight's ready for pickup once you show that you are registered in the CARM client portal. So regardless of whether you're importing one shipment a year or thousands of shipments a year, every commercial importer must be registered in the portal. And that applies to registered and resident and non-resident importers. So we'll talk a little bit about assessing the CARM client portal, how you're going to register and get into the portal. So if you haven't already done so, you will go into just on CBSA website, search CARM, and then you can log in and register in the CARM client portal. So once you go into that, you'll be able to start your registration process. So for the initial setup and for everybody who will require access to the CARM client portal, you'll either need to get a sign-in partner or a GC key. It's up to you for your company which means of being able to register you want to use. So whether you use the GC key or the sign-in partner, at UPS SCS, we are using GC key. And it's important to note that it's unique to each individual. So you would use your company email address when you're setting up your GC key, and your GC key is unique to you alone. Not everybody will need to have access to the CARM client portal, but from a company perspective, you determine who will need to have access. It's really a lot of financial information, and you'll use the CARM client portal to pay the duties and taxes, for example, to CBSA on a monthly basis. So whoever registers in the CARM client portal first is automatically the business account manager. And that role possesses the highest level of management access over the account. So the business account manager is the person that registers, and they are also assigning another person from the company to be a business account manager. It's highly recommended that there are 2 business account managers on the account in the event one person leaves or something like that, because if you only have one business account manager and somebody leaves or is not available, you'll actually have to contact CBSA to get another business account manager added. And once you're registering, it's registration by your business number. And if you have different RMs at the end of your business number, they are automatically linked all together. However, if you have different business numbers for different divisions of your overall account, you'll need to have separate registrations for different business numbers. So overall, there are different user roles. So if you're the business account manager, you can assign different user roles to different people in the company. For example, you may just want to have somebody else who would be assigned a reader, just able to see the information, but not be able to make any changes or anything like that. And then from a customs broker standpoint, you need to delegate access to them, which I'll talk in further detail about. But if you're a business account and you have several RM numbers, and maybe you just want to have individuals that have accesses to certain RM account numbers, then you would assign them a program account manager access. So to register the business, you would click on Register My Business, and then you would put in the business number. You put in the account name exactly the way that it's registered with CRA. And then there's also some infinity questions that need to be answered, proving to CBSA that you're the person that should be registering the account. And the questions are such as, what was your last payment? And what was your last statement of account balance? As well, they could give you a transaction number, and you would need to provide the duties and taxes for that particular transaction number. You can contact your service provider to help you walk through the process and get you the answers to the infinity questions. And then once the business is registered, anybody else that is required to have access, they would then go to where it says request access to my employer, and they would put the business number in, they would search it, and then that account would come up. And then as the business account manager, you would then give them the access that I talked about earlier in the presentation. So this is really a screen print of the CARM client portal, just to give you a sense of what it looks like. You can set up your portal. You can see once release 2 is in effect, any payments, and we'll talk more about payments further in the presentation. If your service provider has completed any rulings on your behalf, you're able to see that detail. And the thing about doing the rulings electronically now, if customs requests more information, you're able to see where the shipment is and whether or not the ruling has been granted and what is the status of the ruling. So that will be a lot more helpful than it is today because everything's done paper and sometimes we're trying to understand, you know, where it's at and who has it and those types of things. But with CARM, everything will be electronic and you'll be able to see the information there. It also shows recent transactions and the financial information for your statements of account and things like that. So from a financial information standpoint, you would click on the statement of account icon there, and you would be able to see all the statements of your account, and you're able to pull up that detail. And as I said earlier, it is important to register now and view that information in detail because you could have a credit on account, and you'd be able to take that credit into account now to get your statement of account clean before release 2. And it's you're also able to see that you could see something there that shows it as late, and it's not necessarily meaning that it really is late. It could be that customs applied a payment to the wrong transaction. There could be various reasons for things showing on your statement of account. But again, it's just important to make sure that that is cleaned up in time for release 2. If there's any AMPS penalties or anything like that, you'll be able to see that under CBSA invoices, and those as well would be due on a monthly basis when your payment is made. So it's important to you that you delegate authority in the CARM client portal, and so you would click on Manage Pending Third-Party Requests. And when you go into that, you will see a request from your customs broker, and you would click on that to accept the request, and then you would give them the delegation authority. And there are 3 different boxes that can be clicked depending on the authority that you want to give to your customs broker. But it is important to look at that and make that delegation, so that moving forward in release 2, your customs broker will be able to continue to do what they do today. Without that delegation of authority, your customs broker will not be able to account for your goods in the CARM environment. So now we're going to talk about the release prior to payment today. So today, in most cases, when you're importing goods into Canada, your customs broker is paying the duties and taxes on your behalf, and then they're billing you for those duties and taxes. So moving forward under CARM, you will have to pay your duties and taxes directly to CBSA on a monthly basis. So it's important to make sure that you take that into account. Some customs brokers will be able to make those payments directly to CBSA on your behalf once CARM Release 2 is in effect, but you'll need to work with your customs brokers to set that up. And you'll only be able to use one customs broker to be able to do that. And the reason for that is because the way customs have CARM set up is if a payment is made, it's automatically applied to the oldest outstanding account that you have in the system today. So the release prior to payment is what you wanted to get in place. And in order to do that, you'll need to either get a surety bond or have a credit card on file for a smaller importer, or you could have cash on account with CBSA, and that allows the shipment to be cleared at the border and then defer the payment of duties and taxes to the end of the month. And it's important that if you're not, you don't want to set up a release prior to payment, then cash has to be paid when the goods are going to be released. The goods would not be released until the payment is made for the duties and taxes. So just talking through the financial security. So as I said, it could be a cash security. It would be a one-time deposit that sits on a CBSA account. And then on top of that, you would still make the payments, but that cash security would continue to sit there. The customs bond, you could set that up. If you need some support with a customs bond, we can certainly help you with that. And then just making sure that you are set up and ready to go for release 2. The B3, as you know it today, is changing to a new document called a CAD, which is a commercial accounting document. There's a lot more data elements and fields that are required in the CAD. And our IT team is working with CBSA. We're actually doing some testing with CBSA to ensure that we're ready to go live for October of 2023. So the release prior to payment, which I did talk about, that's the deferred payment, just making sure that that is set up in advance. And then if you want to make the payments, it can be done by credit card or Interact up to a certain amount. But other than that, you will have to make the payments. You can do those through online banking, the same as you do today with, you know, if you're paying your credit card or something like that online, and it would just be paying to CBSA on a monthly basis. And it's important to make sure that that payment is done timely, or there will be interest charges as well as penalties for late payments. And then just some key takeaways that I wanted to point out that's important. All commercial importers must have a business number. You'll need to create a user account and link it to your portal business account, and take advantage of the release prior to payment and have your financial security in place. And important to delegate authority to the third party who continues to conduct business on your behalf. And if you need further information on CARM, you can reach out to our carminfo@ups.com email box, and we'll be happy to answer any questions that you have. And with that, I will turn it back over to Anna.
Thank you, Penny. And thank you to all of our presenters today for great updates. And as a reminder to everyone, I know we've covered a ton today, so this call will be available, the recording will be available for you after the call if you need to ever come in and reference back to any of the things covered. So as we begin to wrap up, I'm excited to tell you about an upcoming event that we're putting together on October 5th, 2022, Supply Chain Virtual Connect. This is a half-day virtual conference with keynote speakers. We're talking about the latest trends and challenges in global supply chains. So some of the topics that we're going to cover are freight industry updates. We're talking about sustainability and supply chains. And one of the sessions that I'm most excited about, there's a session on current geopolitical climate and how that's shaping the business environment. So should be very interesting. There's also a virtual expo. So similar to an in-person conference, you can hop into an expo booth and interact with some folks from UPS and other attendees. So if you're interested in learning more about this or joining us on October 5th, you can scan the QR code or click a link that I'm about to drop into the chat. And That's where you can register for the event, and we hope to see you there on October 5th. But that really wraps up our webinar today. I know there's a couple of questions in the chat. We'll see if we can take them in the Q&A function or get back to you afterwards. But I would like to thank you all for joining us today. And any remaining questions that you might have, you can reach out to us directly. You can get in touch through the CARM info on the previous slide, or you can take the post-webinar survey that will pop up when you close out of this window. It allows you to submit your contact information and indicate to us what your question is about, and we'll get you in touch with the right subject matter expert. But with that, I would like to join you. Thank you for joining us today, and I hope you have a wonderful rest of your day, and we hope to see you soon in another one of our webinars. Thank you.